all across. Now, I'm sure all our viewers are very excited even today to know what more Heikenashi charts have to offer. But before you begin, I'll just take a quick minute to share a brief introduction about you with all our new viewers joining us today. So, Vishal is a chartered accountant by education and trader by passion. Vishal has been trading and tracking markets for over 15 years now. Vishal started his career as a trader on proprietary desk at Edelweiss, where he managed huge funds and deployed long and short, as well as various other low risk strategies. Later, he was co heading the technical and derivative research desk on Edelweiss, and Vishal also has contributed significantly in developing advanced trading platforms. Now, Vishal prefers to do momentum trading and strictly follows rule based trading methods to eliminate any kind of emotion. He also believes that if you cannot explain why you have bought or sold a stock at a particular level, then you are gambling and not trading. Now, he uses the Heikenashi and point and figure charts for trading and has also developed various rules and setup which has made trading stress free for him. Currently, Vishal Kshatriya is a leading manager of digital product team in Moneycontrol. With that, it's over to you, Vishal. Would request you to also recap a bit about the series one for the benefit of all our new viewers joining us today before you go ahead any further with series two.
Thanks, Shakti, for a wonderful intro. And it's great to hear that the series one, we have seen a overwhelming response for series one. And I hope that simple and yet effective strategies, what was shared in series one, may help people to do a successful trading. Uh, yes, definitely. In my slide today, we will be discussing around 15 to 20 minutes around what we have discussed in series one. Some of the important aspects like understanding Heikenhashi charts and setups I'm covering in a series 2 also. So first 15-20 minutes is a quick recap of series 1, and followed by next 30 minutes for today's session, where we are going to do some more talk about Heikenhashi and applying the same on Nifty and Bank Nifty and understanding support and resistance. So a quick recap. Today, what we are going to learn is a recap of series one, understanding Heikenhashi charts, trade setup, which is bullish and bearish, rule-based trading strategy, uh, then trading Nifty and Bank Nifty and tactics for trading near support and resistance. So if you see the first 4 points are broadly what is a kind of a recap for the series one. Nifty and Bank Nifty and tactics for trading near support and resistance are the two subject matter which we're going to discuss today by using and applying the Heikenhashi chart. So before I start, the normal disclaimer which even I had disclosed last time, any views or any stock examples illustration shown over here is for educational purpose. There is no view. One should not consider as a view over there. Also, the strategy which I will following for stocks as well as Nifty and Bank Nifty trading, this has been practiced by me and I have seen a good results, and this should not be considered as a only a way where people can make money or a way where you can make money and there could be no losses. So this is a standard disclaimer I would like to highlight over here, and let us have a recap of series 1. So in series 1, we have spent a considerable amount of time on setting up the right psychology, and we have learned and concluded some of the important psychological learning in series 1. So let me just brief over here what are the learnings we have done from a trading psychological perspective. The common questions is which keeps coming from the traders in the market is when to buy, when to exit, what to buy, sell, and markets kya lagta hai. And for this, to answer these questions, people start believing that forecasting the stock is very important, because if we can't forecast, we cannot say whether you should buy right now or sell right now. So the question what we try to answer in a series one was, does forecasting markets or stock price necessary to make profits? It's the answer what we concluded, and what I feel is no to, it's a big no to forecasting. And always remember a Warren Buffett quote which on forecasting, which says forecast usually tells us more on of the forecaster rather than future. So it's more like a personal and emotional bias of the person which comes out in a in a forecast rather than actually the real forecast. So please try to completely eliminate the forecasting element in the stock market. Yes, it may sound very weird that how can you say that if we can't forecast, you don't have to forecast, then how we will trade? Because trading is all about forecasting. We feel that stock price is going to up 10% from here, and if we feel that if you forecast that, then only we can buy today. But no, it is not necessary. And we have, after seeing various slides and illustration on series 1, I hope everybody have agreed. And even to the new people who are joining today, after the completion of today's series 2, you will also agree that forecasting is not necessary. We should focus on what stock price are doing, and not what you should do. So these are the two focus area what we concluded that day: what stock price are doing and what you should do. You should completely avoid what what street talks and what you feel about markets. Don't try to find out why stock price are going up and down. This is very complicated, and most of the people will not agree, because people feel that if how can we completely ignore the reasons of stock price going up and down? Well, there are so in a era where there's so many news and so many noise across all the social media, people try to find various reasons. I would say if you try to ignore those reasons, then only you'll be able to focus on what you should do when stock prices are going up and down. So this is our psychological learning what we did in our series 1. uh, After that, we have discussed about two types of trading approaches, which is discretionary and system or rule based. So in discretionary, we have discussed that it's completely based on intuition of the individual trader, or a belief for an individual trader, and emotions play a very critical role in trading performance over here. System or a rule based trading, on other hand, is all about preparing a set of rules for entry and exit, backtest it, and follow those religiously. The advantage of rule based trading is completely eliminates the emotions while trading, and emotions is one of the most important parameter to be a successful in trading. So these are the approach we discussed that day, and we concluded that you can increase the probability of success in trading with a rule based trading. So the moment you switch from discretionary to a rule based, in a way you are trying to shifting your focus from forecasting to following a trading signal and systems. Just the moment you start following a signals, automatically you will notice over a period of time you will not bother about what are the news coming in the stock, or what are the things which is buzzing in the stock. You will say, my signal have said buy, so I'm buying. My signal have sold exit, and hence I'm exiting. That's a level of maturity which should come when you start trading with a system or a rule based trading. Now coming to Heikinashi chart. So this is all a recap. And for a newbies, please try to pay maximum attention over here. So we have a different types of charts. One is a line chart, one is candlestick chart, which is most commonly used right in today's world, and the third is a bar chart. And you can clearly see the difference of how they have how visually how they look, and also very importantly the way they are plotted are also quite different. Coming to the Heikinashi chart, first, what does the Heiken means? Heiken means average and Ashi means speed. So, what Heikinashi chart is actually trying to do is it is trying to average out, or trying to smoothen out the speed of the stock momentum. So, why Heikinashi chart? It completely reduces the noise. Secondly, it is very objective in nature. It helps create easy rules for entry and exit. It is very simple and visually easy to understand. Those who have participated in series 1, they would have completely agree that it is very simple and very visually very easy to understand, and it can be used for short, medium as well as for long term. So how does a normal candlesticks or traditional candlesticks looks like? We know it is plotted using open, high, low, close. So we can see on the left hand side, open, close is higher than open, and hence it's a green candle. and you can see we have a wick and or shadow which is plotted using high and low. So we have a body and a wick as a two element in a normal and traditional candlesticks. Unlike traditional candlesticks, we have a Heikin-Ashi candlesticks which is only of three types. The number one is bullish candle, which has open equal to low. Because it has open equal to low, we can say that there is no lower or a wick or a shadow on this particular candle. So a bullish candle will have a two characteristics. Number one, open should be equal to low, and there should be no wick or shadow below. Second, we have bearish candle which says open equal to high and it will not have any upper wick or shadow. The third type of candle in Heikin-Ashi is a doji or a trend exhaustion. So in the doji and a trend exhaustion, we will have a wick or a shadow on both the sides. So Heikin-Ashi world keeps revolving in these three types of candle. This is the High Kanashi chart, and you can see over here what this stock has been going up since quite a while. Let us, for a time being, try to ignore which stock is this. What is important over here is an observation over here. We can see only three types of candle over here. You can see the green ones are mostly open equal to low with no bottom wick, and the red ones are open equal to high with a no wick at top, and there are some candles right in the center of the chart where we can see a shadow on both the sides. Those that indicates a doji or a trend exhaustion. So if you see over here, there are no gaps, nothing. Chart is very clean, just three types of candle, very easy and visually very easy to understand visually, and one can clearly make out the trend in the stock, or this chart is completely in uptrend. How Haikinashi candles are constructed? Well, this is just for the reference. You don't have to remember this formula because in most of the trading applications, we have Haikinashi candles been constructed ready-made. But for the people who wants to understand, Haikinashi open is average of open and close of the previous candle. Haikinashi close is the average of current open high low close of current candle, and high is max of high HA open or HA close, and low is min of low HA open and HA close. What is important over here is the last line which says OHLC of Haikinashi candle is different. OHLC stands for open high low close. The open high low close of Heikin-Ashi candle is different than a normal candlesticks, and hence the actual price and the price shown on the candle can be different when you are referring to Heikin-Ashi candle. That means that you should refer the Heikin-Ashi candles more from a signal perspective, and you will actually be doing a trade on actual price. Some pros and cons. The biggest advantage of Heikin-Ashi candle is we have only three types of candle, and it's very visually easy to understand. It's narrow down the volatility and reduces the noise. It detects the strong trend, calms down the nervous mind on when to exit. This is one of the very important advantage of Heikin-Ashi is the moment you enter the trade, there is a lot of anxiety people start facing on whether I should exit at this price or that price. What should I do if it goes down? What should I do if it goes up? Haikinashi helps to calm down this mind and completely give an objective rule of when to exit. It also a lot of time eliminates the false signal which tends to come on a normal traditional candlesticks. The disadvantage over here is a slow mover confirmation can be little late sometime, and there can be instances where stop loss in a trade may be a little bit higher. Can be boring for a trader in search of thrill. Well, we are in the markets not for a thrill but to make money, so you can completely ignore the second uh, disadvantage or cons of Heikin-Ashi chart. Very importantly, where to see Heikin-Ashi charts? These charts are available on all leading charts application and websites. You only thing what you have to do is you have to change the chart type as Heikin-Ashi to change the chart from traditional candle to Heikin-Ashi candle. And yes, our team is right now working, and it will be coming soon on Money Control site as well as app. Yes, now we are coming to a trading setup, which is very important, and this is the core of our high currency strategy. What we have discussed in series 1 and even today. So I would like to say over here, charts don't speak, they scream. It's just that you have to start talking with them and you have to understand charts language. So a lot of time it does happens that after stock correct and when you see the historical prices, we realize that you know what, chart has actually given a sell signal at this level, but we have not seen those levels. We have not understood what chart was saying at that point of time because we were too busy in trying to analyze what the news are coming and a lot of other buzz which keeps coming out on social media and a lot of other places. So please start talking with your charts. They don't speak, actually they scream. So we have two types of setups in Haikinashi. One is bullish and second is bearish. So let us take step by step for both. Let us discuss bullish trading setup and trend. The first one is when we have a series of green candle with open equal to low, we will say the trend in the stock is bullish. Please understand, it is not a three candle. It could be a series of 1, 2, 5, 10, 20, any number of candles. The three candles over here is used for illustration purpose. The second is a bullish trend getting stronger. So after a green series of green candles with open equal to low, if the height of the candles starts increasing, we will say the bullish trend is getting stronger. The third one is after a series of green candle, when the height of the candle start decreasing or we see a doji coming up forming on a charts, we will say that bullish trend is getting weak or exhausted. And the fourth one is a bullish reversal where we can say that stock is falling, and it is depicted by a red candle with open equal to high, and immediately there is a reverse bullish reversal candle, and the confirmation of the same can be done right on the next candle itself. So these are the four bullish trading setup and trend what we have when we have discussed this. Let us discuss now and understand bearish trading setups and trend. When we have a series of red candle with open equal to high, we will say a trend is bearish. When the height of this red candles increases, we will say bearish trend is actually getting stronger. Same way, when height decreases and the candle size becomes smaller or they become a doji, we will say the bearish trend is actually exhausted or it is getting weak. And the fourth one is bearish reversal, where we can say that if the stock price is going up and suddenly we see a red candle with open equal to high, we will say this is reversal of the bullish trend. So it is a bearish reversal and it is confirmed by a second candle when second candle 2 opens with open equal to high. So these are the core trading setups, and based on these setups, we will be able to start talking with the charts, and we will be able to understand the charts language. So this is the same chart what we have shown, and let us now start speaking with this chart. You can see over here that right at the bottom of the chart, we can see a series of green candles which has an open equal to low. So the trend is bullish. And then fourth and fifth candle, where I have marked the first arrow, you can see the height is actually increasing. So we can say a bullish trend is actually getting stronger. So what how the mind should work is the moment you buy a stock and it goes up for 3 days, the general tendency which comes to a trader's mind, 3-4 दिन से ऊपर जा रहा है, let me book a profit. But what actually happens is Haikanashi shows that height of the candle is increasing. That means trend is getting stronger. The moment we start reading this way, the trend is getting stronger. How can I book profit? In fact, now stock price is going to go up further. and then you can see it has further gone up, and then we have seen a series of doji, which indicates that bullish trend is getting weak or exhausted, but there was no sign of reversal, and in fact, bullish trend has resumed again. Now, if you are holding the position, and if you don't have, if your stock price don't move up for 2 to 3 days and form such doji, there is a anxiety which comes in the mind that what should I do? It's just not moving, and immediately the next candle we see a bullish candle with open equal to low. This is a screaming point for the on a chart, where charts is screaming and telling you, please don't worry, I am giving you a signal, I want to go up, the price want to go up. So you can see over here, this is a screaming point for the chart, and then we can see again bullish trend is getting stronger, and there is a series of 3 to 4 dodges which indicates that now actually the trend have exhausted, or trend is actually getting weak. And then we have seen a bullish reversal with candle which is open equal to high, and there was a marginal correction over here. Stock has corrected from here, and again after some days we have seen a bullish reversal happening. So this is a second screaming point on the chart, which says that previously I have rallied very strong, I have corrected, the weak bulls are out, and now I'm again resuming my previous trend, and hence we can say this is a screaming point. What tends to happen is when stock rally from 100 to 200, just an example over here, and from 200 it comes to 180, people start saying ki stock has corrected 10% from high, and because it has rallied a lot, now there is no room for further this stock to go up, and then we see a bullish reversal candle, and then a strong rally which is depicted by a bullish reversal and bullish trend, and in fact a bullish trend getting stronger. So this way, everybody, if you are a new and if you have not started reading the charts, this is the way you should read it. And by practice, you will be able to achieve such kind of proficiency where you can eliminate all the noise and just start speaking to the charts this way, that what is actually happening. If your emotions are in sync with this language or what we have discussed on this chart, then your trading performance can be improved drastically. So what happens in Heikin-Ashi trade cycle is bullish trend. Suppose let us take an illustration over here. There is a bullish trend which is going on, and after bullish trend, there could be only two scenario, which is either a reversal or a trend exhaustions by forming a doji. So if there is a reversal, after reversal there could be a trend exhaustion or again a trend change. Or after doji there could be a reversal or trend change. This way the world of Heikin-Ashi keeps revolving in bullish trend, doji and reversal. And this is why I have termed this as stress-free trading in Heikin-Ashi, because it's very easy. You can simply say that currently the trend is bullish, currently it is a confusion in the market, or there is a reversal from bullish to bearish, or vice versa. Trading strategies using Heikin-Ashi. So in series one, which we discussed on 24th July 2020, what we discussed was a positional trading using a trend following, and this was specifically for the stock. And what we have concluded over there is the holding period was up to 1 month, and we will refer a daily chart. And we have also seen that how to manage your portfolio stock, where we have a mixed reactions and emotions of greed and fear. So when can you we have also discussed when should one exit the portfolio stock and when should one re-enter the portfolio stock. So this was the series one, where we have discussed about stocks and stock strategies. Series two, which is today, we are going to discuss about Nifty and Bank Nifty trading. So I will be addressing for various type of traders over here, the one who wants to do momentum, one who wants to do positional trading in Nifty and Bank Nifty, or anyone who is interested in doing only intraday trading in Nifty and Bank Nifty futures. Support and resistance, the most common words being used everywhere whenever you see a technical discussion. we will actually discuss how can Haikanashi help us to buy and sell right at the key levels, and that too with a very, very objective manner. So
Right.
uh, today our discussion would be Nifty, trading Nifty and Bank Nifty, and support and resistance. And what we have done was on series one was stock. Now at this point of time, uh, I would like to highlight some of the questions which was being addressed a lot by a lot of our users for series one. So if we have any questions over here for series one, let us have a discussion on that.
Right. Thanks a lot, then, Vishal, for that very crisp recap that you've given. I'm sure all our viewers now, the new and the old viewers, are on page one. They know exactly what we are discussing. They've got the background of how high can actually charts work. And now you'll be taking us forward from here. But based on your first series, we actually got a whole lot of questions, especially with respect to stock selection process. I'm sure even you would have got a whole lot of queries regarding stock selection process. So could you just take this part further a little bit to explain to all our viewers how to go about this stock selection process using the Heikenashi charts? Which are the stocks we need to apply this chart to exactly?
Yeah, even I have received a lot of query on my Twitter. So what I would like to highlight over here is I have a slide which we have shown in our series one about the stock selection, and I will highlight the same slide over here. So what happens generally is when we see a strategy what was discussed for the stock where we can very easily answer a buy and sell, people tend to start applying on the stocks what they have traded previously or a stock what they are holding currently. Well, the objective was the whole objective of series one was not that you should apply on the stocks what you have previously traded or what you are holding right now. In fact, I would rather prefer that people apply those, and if some signals are saying that this is not a strong or trending stock, you should exit it. And I have specifically mentioned that your world of stocks should be only one which has been discussed at that point of time. So what I would like to highlight at this junction is choosing a right stocks to trade, and this is the same slide what we have discussed in series one. So the first step of choosing a right stocks to trade is either you select a Nifty 500 or Nifty 200 index. So if you want to trade in a multi-cap, you should select 500 Nifty index. And if you only want to focus on a large cap, then you should select Nifty 200 index. After you select the index, you have to identify the winners from this index. Remember, we have discussed at that point of time that trend is your friend, and you should always trade in a direction of the trend. So to trade in the direction of the trend, it is very much essential that you identify the winners from this Nifty 500 or Nifty 200. So, how to identify the winners? Stocks which are in strong uptrend or making a new life high or a 52-week high are actually the winners. And we can also objectively define these winners by saying that any stock whose 1 year performance is greater than 50% is a winner. And these are the stocks which is my stocks which I will keep tracking it, and whenever a Heikinashi gives a buy or sell, I will only trade in these stocks and then initiate a trade as per the signals from Heikinashi daily chart, which we have discussed at that point of time. You can update this list every weekend. So you can update this watch list every weekend. Though I have observed that the reshuffling don't happen so frequently, but some stocks may go out, some may come in. But basically, what I'm trying to again reiterating the same point, a lot of people who are already trading in the markets, those people might be having a position in a stock which they have stuck up in a holding, either loss making or there could be a profit making. What I would like to do is, if you really like the strategy of Haikinashi, what we have discussed, and you're serious about shifting from discretionary to Haikinashi trading, then the first objective what you should have is try to exit all the stocks from the portfolio which has given a sell signal and which are not in an uptrend, which are in a downtrend, and gradually shift from that that list to a list which is right now or discussed, which is based on Nifty 500 or 200 index. So it's a, I know there are a lot of questions which has came up to us about how identifying the stocks, and there are some stock specific queries also which was been coming to our team, that what about L&T, what about Axis Bank, what about Adani Enterprise, and a lot of other stocks which we have seen that people were asking for query. But please, none of these stocks falls into a list of winners, and hence there is no way we should apply a Heikenhashi charts on those. Please understand, Heikenhashi chart will give you a best result, and optimal way to capitalize this strategy is to only trade in the winners, or only trade in the stocks where we have a strong uptrend. So we have also discussed that on a money control site, you can see this. So you can see, you can go to moneycontrol.com, and a market section, you can see at the top left corner, we have a green selection where we have a markets. Once you go there, you need to scroll down and to a stock action section, and we have a top gainers over there. You have to change this to Nifty 500 and the period as 1 year, and you will have a top five gainers right over there. And if you want to see a full list, you need to do a view more. If you want to trade in a futures market and also interested in short selling, then you have to switch to top losers and select as a FNO stocks and 1 year. So any stock which is greater than, which has fallen more than 30-40% in a 1 year time, these are the stocks where you have to shortlist. We have to go short as and when the signals came. We have also discussed the list over here, and you can see a huge list: Granules India, Navin Fluorine, ISEC, Escorts, Bharat Rasayan. There are a lot of stocks. The Laurus Lab, we discussed today. Today, the Laurus Lab was almost uh, 15-16% up. JB Chemicals, and we have seen charts of most of the stocks. And I request to the users that please, if you want to apply Heikenhashi charts on your own, then please make sure that chart is in uptrend. It should be a strong, making higher and higher lows. It should be near life high. It should have given a return more than 50-60% in 1 year. Then only it makes sense to apply the strategy what we have discussed, and try to gradually move from your current portfolio or current trading strategy to only trade in this stocks only.
Right. Thanks a lot, Vishal, for clarifying that big doubt for all of our viewers who had put in a whole lot of questions on this thing. So basically, the whole idea is to apply Heiken-Ashi charts to only a select list of stocks which fall under Nifty 500 and Nifty 200, and also identify the winners based on the stock selection process that Vishal has just shared. You need to check all the parameters that he's talked about, be it the growth in the last 1 year. All of those things have to be calculated, and only then you need to apply the Heiken-Ashi charts over there. Okay, let's then move on to series 2 now, and would request you to, Vishal, help us understand how to go about trading in Nifty and Bank Nifty using the Heiken-Ashi chart.
Well, this is the most hottest topic. You can see the turnover which happens on a daily basis on Nifty and Bank Nifty future are massive. In fact, the options may we can huge turnover which is happening, and especially on index side. So let us try to trade Nifty and Bank Nifty stress free using a rule base, though it could not be 100% stress free when you are actually trading Nifty and Bank Nifty. But yes, if you apply a normal, a very simple to use rules to trade this, we can actually be quite relaxed and trade Nifty and Bank Nifty. So some questions which needs to be first answer before you want to start trading in Nifty and Bank Nifty, or if you are already trading, you should first understand that do you have answer for these questions or not. Can you carry forward your positions? I mean, if you are a trader in a Nifty and Bank Nifty, are you willing to carry your positions overnight? And if so, then for how many days? How many rupees loss per trade you can see in terms of number of points? Well, if you have not answered these questions and you are still trading in Nifty and Bank Nifty, then it's a serious thing. I think you should First, try to find out the answers for all these things. Are you ready for a gap opening and also taking your positions in gap? So suppose you are a short and Nifty opens 100 points up, and then a signal is given by high energy chart that you know what, you are a short, you are losing 100 points, and now because 100 points markets have opened 100 points up, high energy has given a buy, and you go ahead and buy 100 points up. I mean, there should be a readiness for the gap opening, and also uh, readiness to take a position in a gap of opening. The fourth one is, how many losing streaks can you see together? What I'm trying to say over here is, there is always a phase in the market where none of the strategies work, and you may see that 8 out of 10 trades you will make a loss. So how many times you can see that uh, every trade you make is a loss. I feel you should be ready with 5 to 6 streaks together, where you make a 5 to 6 trades, and all those trades were loss making. And this should not disturb and nervous you, because risk management can be done through proper positioning size. So now there are various kind of traders for Nifty and Bank Nifty. So I've tried to address them. What kind of time frame charts you should see? The first one is a daily chart. So if you are a positional trader who wants to trade Nifty and want to hold the position for 10 days, 15 days kind of thing, and wants to capture a very, very big move on Nifty, you should refer a daily chart. And if you're a momentum trader, which is 1 to 3 days kind of holding period, then you should refer 60 or 30 minutes Heikin chart. If you're a scalper and wants to, keep buying and selling a Nifty future, then you can refer a 3 minutes chart. And if you are an intraday trader where you are happy with 2 to 3 trades a day, or maybe one trade a day, then you should refer 5 or 15 minutes charts. Well, each of this time frame, if you go and backtest it, it has its own success ratios. Definitely a success ratio will be higher when you switch to a higher time frame, because volatility is taken care in higher time frame vis-a-vis lower time frame. uh, Today, a lot of examples what we are going to discuss. We will be discussing on 60 and 30 minutes charts. And if you ask me, I would rather prefer either 60 or 30 minutes chart. Now, because which instruments to track? This is very important, because what happens is we track markets, Nifty and Bank Nifty, which is mostly into a spot, and we trade in a futures. So there is a common confusions which keep coming up. Which instrument one should track Heikin chart for signal? Well, if you ask me, you should decide one instrument, that I'm going to track only this one particular, either a spot or a futures. And once you decide this, then you should not keep switching between spots and futures. So suppose you have decided that I will be tracking Heikin charts for signals based on spot, and I will trade in futures, then you should keep following the same spot over a period of 6 to 9 months, unless and until you don't feel that the spot tracking spot is not the right way. Well, both the methods is going to yield the same results. I have not seen a drastic difference, though there could be a difference sometime during expiry week or on expiry day. But the 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 important part over here is, you should track only one instrument consistently. So all the examples what I'm going to share today will be based on spot instruments. Well, stop and reverse trading. This is one technique of trading which you should first know before we start discussing about the Nifty Bank Nifty trading. What is stop and reverse trading? SAR method of trading involves continuous buying and selling when trading signal occurs. Second point, While existing open buy trade, fresh short should also be initiated and vice versa. Trading position always remain open while we trade in this. So what happens is, suppose you have a buy position initiated and open right now, and then Heikinashi has given a sell signal. So you don't have to just exit your trade, you have to also go short simultaneously. So let us try to understand this top and reverse trading strategy along with a Nifty and Bank Nifty trading strategy. So when you will buy or initiate a trade in Nifty or Bank Nifty, so that suppose we see that there is a series of red candle with open equal to low on Nifty or Bank Nifty, and then we have seen a bounce happening in the markets, and on charts we have seen open equal to low with a green candle, which indicates that it's a bullish reversal. And what you have to do is you have to go and buy at the opening. So this is a strategy which we also discuss for the stock. Now, exit strategy for the buy position. So when you have open buy position, there is general tendency that stock price must be going up and it must be forming a bullish candle with open equal to low, and then there could be a doji or a trend reversal with a red candle having open equal to high. So we have to react on the second candle, and what we have to do is you have to exit your buy position plus you have to short sell at opening, both together. So let me just give you one illustration over here. Suppose you were trading a bank nifty and you were holding a one lot or 25, one lot of bank nifty with and lot size is 25. So you are holding a 25 or a one lot of bank nifty and you are carrying a long positions, and immediately when a exit strategy or when Heikinashi has given a sell signal, first thing first what you will do is you will sell that one lot which is squaring off your buy position, and further sell one more lot because Heikinashi has given a sell signal. So the process of exiting your trade and simultaneously taking a reverse trade is known as a stop and reverse trading strategy, and this is what we will be doing while trading Nifty and Bank Nifty futures using Heikinashi chart. So now let us further take this explanation. Now, because you have a short sell position open over here, the general assumption could be that stock price or a Nifty or Bank Nifty is falling with a downtrend or with open equal to high candles, and a market suddenly bounce back. So we will wait for this candle to lock in, and you have to react on another candle where you will say, now I will exit the sell position. And not only that, you will also buy one more lot simultaneously. So over here, since in a previous slide we have seen that we have shorted one lot of Bank Nifty and you are carrying a short position, and Bank Nifty bounced back from there on, and it has given a bullish reversal with open equal to low. So first thing first, what you will do is exit your sell position. It could be either in profit or it could be cost or it could be loss, and further add one more buy position right at the opening. And please understand, we have to do this together simultaneously, immediately. You don't have to wait that let me first exit, let me try to track index for some 5-10 minutes and then I will buy. Please don't try to gamble around with the prices, because Heikinashi has given a buy signal, you never know that we can see a good rally from this signal. So please try to do this simultaneously. This is very important, and this is a core of trading Nifty and Bank Nifty, and hence I would like to reiterate this. Once you buy at opening, you have to keep carrying forward the position till the time you don't see a bearish reversal with open equal to high. You have to react on a second candle where you will exit your buy position and simultaneously go short also. So if you are holding a bank nifty with one lot, actually you have to go and sell two lots, one lot to exit and one lot to create a fresh short position. After creating a short positions, if markets are falling down and see a bounce back, then what you have to do is on a second candle exit the sell position and simultaneously buy one more. So you are having a, excuse me, you are having a short position which is a minus one lot, and you have to add one more, so you will buy two lots simultaneously right at the opening of this candle. This is the core to a Nifty and Bank Nifty trading using Heikin. So now let us see an illustration of how this strategy must have performed in the month of July or maybe in last 10 days. So before that, life of Heikin trader, we discussed this life of Heikin trader in a stock also. It remains pretty much similar. You have initiated a buy signal, and there could be only two scenario, either a doji or a bearish candle, which is a reversal. After a reversal, we will exit your buy position and further create a short position. This is a modification to a originally in stock we will not create a short position. In stock we will only exit the position and wait for the next signal to again buy. Over here we are creating a further short position. After the doji you can see a bearish red candle. For that you have to anyway create short positions and exit the buy, and after doji there could be a one more scenario which is a bullish candle, which indicates that bullish trend is about has resumed again. Then you can keep riding or add more position. Remember we discussed about pyramiding strategy in our series 1. If you want to do this in a nifty also, you can do this and it works very well. Again, never ever try to average losing positions, always try to do a pyramiding, and pyramiding also works very well in Nifty and Bank Nifty. So, recent trades of Nifty and Bank Nifty. Let us take a Bank Nifty 30 minutes. This is a spot chart, and the chart is starting from 20th July, where we have seen a first Heikin buy signal happen. And you can see over here, I have mentioned two levels. One is HA and one is A. The HA stands for the Heikin levels. So when we see a bullish candle, we will be having open equal to low. So open equal to low level as per Heikin candle would be 21,766, but actual price at that point of time for the Bank Nifty would was 21,960. Remember we discussed at the time of construction of Bank Nifty, where we have clearly discussed that the price of the Heikin candle and the actual price will differ. And you can see over here Heikin price is 766, the actual price was 21,960. And you know what, further the actual price of the future price would be completely different. So just take and signals from Heikin over here. Well, the difference over here is almost 200 points. Normally this doesn't happen, but the reason why we have a 200 points difference over here, because the height of the candle is very big. So the moment you have created the long position over here, you can see Bank Nifty has further gone up, and there was a series of doji over here, and then there was a one red candle you can see over here before that big green candle. This red candle was formed between 315, between 3 to 330. So you don't have to exit. If you see a red candle happening between 3 to 330, you don't have to exit on the same day. As per the rule, you have to react on the next trading day. And you can see, even though markets have closed with a bearish candle, the next day at 9:15 markets are open with a big gap up, and you can see what has happened. There was a huge rally in a nifty, in a bank nifty. So you can see at the last we have seen a red arrow where you can see that we can see that Heikin has given a sell signal. So the Heikin prices which is open equal to high was 22,812, while the actual price at that point of time was 22,760. So you can say in this particular trade, you have bought the Bank Nifty at 21,960 and you have sold this at 22,760, which is whooping almost 800 points of rally. After this, you can see what has happened. After a sell signal, immediately we have seen a buy signal. After this buy signal, immediately you have seen a sell signal. And please understand, keep following this system and keep following these signals unless and until, see, after a strong rally of 800 points, we have got a four signals, two times a buy and two times a sell. And if you see over here, in this multiple times a buy and sell, there could be a possibility that you must have lost around 300 to 400 points. So please don't get disappointed. If you see this series of losing streaks we discussed, you should be ready to see 5 to 7, 5 to 6 losing streaks in a trade. And if you see a 5 to 6 losing streaks in a loss making trades simultaneously, please understand something big is coming, and something big is been markets is signaling that there is a confusion and there is a fight between a bull and bear which is happening, and whomsoever win this battle, he is going to take a bank nifty or take the markets on that direction very very strongly. So you can see over here I have written a Heikinashi price. Heikenhashi price over here is for a sell signal is 22,845 and actual price is 22,770, and the actual price which you might be trading in the futures could be further different. And you can see over here, after a buy there was a marginal rally and there was a gap down opening. So you were holding a long position over here and there was a gap down opening. So we also discussed that if you have a position open and if we see a gap down opening, you should be ready to exit your position and also take a reverse position. Over here I remember on 24th, Bank Nifty was open almost 350, 400 points down, and you could have been losing around 200 points over there. And a question which normally people tend to ask, Bank Nifty has actually opened 400 points down. Is it why should one go and short sell 400 points down and see what has happened to the markets after that? It has further fallen down, and then there was a small retracement, and further there was one big gap down. I remember on 27th, Bank Nifty again opened 500 points down, and you were actually holding a long position at that point of time. So you should book your loss with a 400 points and further go short which 500 points down, and you can see what has happened after that. It has further fallen over there. So please try to understand that whenever we see a gap down or whenever see a such kind of big candles coming, it is a signal that something big is coming, and you should holistically and religiously follow those signal. After this fall we have seen a buy signal, and you can see a further one more round of rally which is almost 300, 350 points. So this way, from 20th to 29th July, this chart has not been updated for today. It's 29th July, somewhere around 1 p.m. till 1 p.m. I updated this chart, and you can see that in last 10 days we have almost seen 8 to 9 trades happening. Sometime you have carried forward the position, sometime you have not carried forward and exited on the same day. And what has happened over here is you have gained 800 points in this strong uptrend. In this battle of bulls and bears, where we have got multiple buy and sell, you actually lost 50% of the gain what we have done. So we have lost around 400 points, and we have gained 360 points in this downfall, and further 340 points in this uptrend. So if you see net, you were able to make uh, almost 900 to 1000 points in last 10 days. So if you keep following this signal, and if you were disappointed, if you would have disappointed with a multiple buy and sell signal, and you must have thought that out of 5 trades I did, all 5 trades I have lost money, and 400 points was a total loss what I have done, this strategy is not working for me. Let us stop this strategy, and immediately we will get a best signal which will compensate your full loss. So if you decide to trade Nifty and Bank Nifty using this strategy, I would recommend that follow this religiously for minimum 3 to 4 months, and you will definitely see some good results in your PNL. This is Bank Nifty 1 hour, and you can see the hourly charts are much smoother, and you can also see over here that the signals are number of signals are also quite less. So you have gained 1400 points in this downfall, you have gained again 1400 points in this uptrend, you have gained 900 points over here and right now. So if you see 1, 2, 3, 4, 5, 6 signals from 10th of July, what we have seen on a Bank Nifty 1 hour chart. So if you want to do a less frequent trade and you can't track markets every half an hour, you can try to switch to hourly charts also. This is Nifty 30 minutes. You can see over here from 15th of from 17th of July, it has given a buy signal at 10,700, and it has given a strong rally till 11,100, and position was open from 17 to 22nd July when it has actually given a sell signal, and we have gained around 440 points in Nifty in by holding this position for 3 to 4 days. So willingness of holding this position is also very important, and you can see in this rally the heights of the candle was increasing, which gives a conviction that you have to hold this position as trend is getting stronger. After this up move, you can see Nifty was almost trading in a range bound, and you must have seen multiple buy and sell signals. So yes, definitely in this buy and sell signal, you would have lost the money. Now, which instrument to trade, Nifty or Bank Nifty? Choose your own instrument. The volatility in Nifty, Bank Nifty is quite high. The volatility in Nifty is little bit low. I would prefer to trade in a Bank Nifty. The only reason is it is a sector specific, and if one sector is going down, then throughout the day we will see that particular sector going down only, and vice versa. Against Nifty, where if IT is going up and taking Nifty up, then pharma can drag down, or a vice versa. So I had preferred a Bank Nifty. You can choose whatever you want to trade, either Nifty or Bank Nifty. The strategy remains the same. Some observations: strategy will help to capture a big trending move in a range bound markets, or after a strong move on either side. There could be a multiple instances of buy and sell signal leading to losses and maybe over trading, and we've discussed that should be absolutely okay to you. What is needed is you keep following systems and signals given by a chart, and you will never know when a next signal will be there which will give you that one big move. So don't skip any signals. Even if you lose 5 to 6 trades in a row, keep following, keep trading it. A one big move will not only compensate your losses in that multiple instances, but it will also make your net positions or net to net profitable. So this is with respect to Nifty and Bank Nifty. Now let us try to understand trading support and resistance. So what happens in support and resistance is a level where bulls and bears are actually fighting, and we should ideally not get into fighting and try to find in this fight how can we take an advantage. So using Haikinashi, we can actually objectively define when to buy a support or resistance and take advantage out of this fights which is happening between bulls and bears. So before we discuss about when to buy at support and resistance, what I felt is let us have some basics understanding on support and resistance. Some people might have a concept very clear, but some people who may be new to the markets, it could be helpful for them. So, a definition of support and resistance are key level where forces of demand and supply meet, and a support is defined as support results from inability to break the previous low, that is level where demand is strong enough to stop price to fall further. Resistance results from inability to break previous high, that is level where supply is strong enough to stop prices to rise further. And there is a principle of polarity which is very important, a concept where once resistance level is broken, then it will become support, or when support is broken, it becomes resistance. So these are the basic definitions of support and resistance. And I know a bookish definition will never help you to you understand. So what I try to do is I try to explain support and resistance on charts. So this is a chart, a line chart where prices are falling, and once the price stop falling and goes up, we can say this is the support. This is a level where a demand has emerged in the stock, and price has, and that demand has led the price to go up. After this up move, we can see that uh, price has reversed from some level, and at this level you can say the supply was higher than demand, and hence stock price has fallen down, and this is the resistance. Now a general expectations is, and how the psychology work is, a previous demand zone where we have seen a stock price has bounced back. The expectations is this time also a demand will come at a same level, and this will take the stock price up. Same way, on a resistance also we can expect the same thing. This way you can see how the stock price move in support and resistance area, and one day either a support or resistance can be taken out. And in this example we have seen the resistance has been taken out, and we will say this is a breakout. And once we see a strong rally, a price from where a rally stop and reverses or fall down, we will plot a new resistance and support. So once it keep start falling down, we know the previous resistance was this, so you will extend the line, and general expectation is previous resistance will now become a support, and stock will, and we can also find that we have a resistance and support which is a completely a new one over here, and again a bounce back from support, reversal from resistance, and this time if you see stock was not able to find a good demand near support, so we can extend the previous support line, and we can see over here that this line can now act as a support, and the previous breakdown level which was a support will now become resistance for the stock. So we have seen resistance turning support and support turning resistance. This is support and resistance explained in a most simplistic manner, and trust me, the stock price does move this way. It's only that you need the eye to see this in a proper way. The thumb rule for trading and support and resistance, well, because support and resistance are being used so commonly in today's world, where people have try to find a support at a wrong in a wrong stock at a wrong price, and try to find a resistance at a wrong level and a wrong stock. So what I try to do is try to address the thumb rule. So we have a two types of markets: a rising markets which is uptrend, and a falling market which is downtrend. So when we have a rising markets, you have to always find support levels and buy near support as per the signal. When we have a falling stock or a market, you should always look out for the resistance level and sell as at near resistance as per the signal. What generally happens is when the stock price is falling very high, people tend to try to find a support in a falling stock and try to find a resistance in a uptrend stock. This is completely different. We should not do that. If you try to find a support in a downtrend stock, then you will miss selling that particular stock at the right level. Same way, if you try to find the resistance in a rising stock, then you will miss out buying that stock near support level. So please understand, never ever find a resistance for a rising markets or a rising stock price, and never ever try to find a support near for a falling stock. So there is always an ambiguity about initiating a position at a support and resistance level. What tends to happen is the moment you draw a trend line, you will be able to identify that 380 is a support level. Now, the moment stock price is falling from 400 to 380, uh, does that mean that you have to actually buy? So from 400 to 380, stock prices came at 380. Now the general tendency is stock has came in near support level. Let us buy at 380. But what is a guarantee that from 380 it is going to bounce back? There could also be a possibility of breakdown, right? Same way, if stock price is going up from 100 to 150 and we have a resistance at that level, what is a guarantee that from 150 it is going to correct or there would be a breakout? So we can have a Heikinashi buy and sell strategies to remove this ambiguity and clearly define that from support level, demand has emerged, and from resistance, a supply has emerged. So we can also use exit strategy for at near support and resistance using the same HA buy and sell techniques. So Heikinashi by support. So suppose we have a trend line drawn, which is a support, and stock price is falling. Well, if it comes near support, we just don't have to buy it. What you have to do is, if we have a confirmation that yes, from support demand has emerged, and we have seen a demand, a confirmation with open equal to low candle, then we can say yes, a reversal has happened from support and buy at the opening right at the next candle. Same way, if you have a resistance level been plotted over here and stock price is going up and we see it has tested the resistance, you should not short or exit a position near resistance. If we see a reversal happening from resistance, then only we can say yes, the reversal or actual genuine supply has actually happened near resistance, and Heikinashi signals have actually shown that signals that, and hence you should exit the position near resistance level. Same way, if you want to short sell, then you should not short sell just at the resistance level. You should wait for the Heikinasi signal to give a sell. And if you're trying to exit your short sell position, just randomly don't exit near support level. Wait for the reversal of that near the support level. So this is how you can trade support and resistance. And let us try to find out the support and resistance on Nifty 1 hour chart, which is a Heikinasi chart. So you can see from 20th July, Nifty has rallied very strong and it has halted at one level and corrected. So we can see that we have a one resistance over here, and you can see over here multiple times Nifty has Nifty is not able to breach one support level, which is this black line, and you can see that second time it came at that level and it has formed a bullish candle with open equal to low. So the second time when Nifty has formed a bullish candle with open equal to low near support, this is a level to buy a near support. And then what has happened is it has corrected, it has rallied very strong, and it has also surpassed the resistance level. So we can say a breakout has happened. So the red line, which we plotted as a resistance, will now become a support line. So after rising, after giving a breakout, if by chance Nifty comes to that red line, which is a support line, which was erstwhile a resistance line, we can say that Nifty has tested the support, and you can see how beautifully the Nifty has reversed from that particular red line or a support line, and then seen a rally. So this is a classic example of resistance turning support and a breakout happening again, and we can again plot a resistance or support line. So this way you can very simplistically find support and resistance, and also trade Nifty based on support and resistance signals given by Heikin chart. One more example of Maruti. So you can see this chart is from December 2018, and what I will do is try to plot a support and resistance on this particular chart. So there was a downfall, and Maruti reversed from this price, from this particular level. So we have a one support line plotted over here, and after that we can see that we have a diagonal trend line which is a resistance line. After that, what has happened to the stock is it has broke that support line. That means now this support line will now act as a resistance, and you can see over here a new support has been established after a breakdown. So we will draw a new support line. You can see over here how difficult was for Maruti to break this green line, which was a resistance line over here. But finally, when it broke out, it has also broken out its previous resistance level, and now the stock has came into a new territory. You can now see over here this is a breakout point, and we can start drawing a new resistance line. Now you can see the green line, which was a resistance line, has now act as a support line. And you can see in this fall which has happened in the March, you can see there are so many days where there was an indecision and bull versus bear was happening, where for almost 5 to 6 trading sessions, stock price didn't move and it remained at that particular level. Interestingly, in this fight, Heikin has never given a buy signal. It was a doji, which indicates the confusion, and then a sell signal has occurred. And you can see over here a massive fall. After that massive fall, we can see a previous support line which we have drawn is acting as a resistance, and that resistance, when broken out, is now acting as a support. Now if you recall a trend line, a green trend line which we have drawn from the low of Jan 2019, a green line I'm referring to, that particular line is acting as a resistance, and stock price is not able to break that particular trend line, and even after a multiple attempt. So you can see a 6 months old trend line, a 6 months old level, a support level, which which is now a resistance, is still a valid, and Heikin is saying that this level is not able to, stock is not able to surpass this level. So this way you can trade, you can read the chart. This is a bit advanced. This way you can read the chart how price are reacting near support and resistance, and do a trading near support and resistance. If you are not able to plot this line, and if you are still a beginner, completely you can completely avoid trading near support and resistance, and uh, trade completely based on a strategy what we have discussed in series 1. So in ICICI Bank, you can see multi series of resistance support line being plotted. So this is a first support, this is a resistance, and there is a breakout. And after the breakout, you can see that stock price have done multiple attempts to break the 550 levels, but it was not able to break. And then there is a support line which ultimately got broke, and there's a massive fall. You can see over here now a 380 390 level, where a old trend line which was drawn from September 2019, that level is still acting as a resistance for the stock, and it is not able to break this level. So remember, a learning over here is old trend line, old levels are very important, and signals given by Heikin helps us to actually trade based on old trend lines. You can see over here the uh, we can see at the last part of the chart that ICICI Bank did try to break this resistance on an intraday basis, but it didn't happen, and then a sell signal had occurred over there. You can see I can have plotted over here support resistance. This is support, this is resistance, this is support, and this is a resistance. You can see how beautifully the stock price have exactly reversed from support or exactly reversed from resistance. And whenever resistance or support has been broken, what has actually happened? So, with this, I am done with series 2, where we have discussed the strategy for Nifty and Bank Nifty and also how to trade near support and resistance. My only request to the people who are new to technical analysis, try to avoid plotting the support and resistance line because it may make things complex for you. People who have been seeing a charts over the years and able to find support resistance, it's good for them to now know that when exactly one can buy near support or resistance. For the beginners, try to follow a strategy or a group of stocks which we have discussed in series 1. Best of luck to all the viewers and wish you all happy and stress free trading. Before we end this, I would like to speak out something about psychology again. Well, I believe psychology is very important. That's why I'm speaking out again. What you can control and what you can't control. Well, what you can't control over here is a price movement and the outcome of the trade. You don't have virtually any control on the price movement and also outcome of the trade. What you can control and what you should focus is when you trade, when not to trade, what to trade, when you should exit a trade, your risk. Worst case scenario. You choose your tools, your strategy, your feeling towards outcome. Well, you can completely control what you feel, and if you follow Heikenhashi charts, your learning progress. So these are the huge list we can have about what are the things you can control and what you can't control. And you know what? Unfortunately, people have tried to focus and spend a time on the things which they can't control, which is a price movement and outcome of the trade. If you try to focus on the things about what you can control, like when to trade, when not to trade, which signals to follow and all, you will be able to achieve a good level of success in trading. One more, the most important elements of good trading are: number one, cutting losses; number two, cutting losses; and number three, cutting losses. If you can follow these three rules, you may have a chance. I read it again. You may have a chance to win in trading. Please important, stop loss is very important. Cutting your loss is very important. So please take these things very seriously. Don't just keep holding your loss positions longer and longer, because the more you hold your losing position longer, the more is the probability that you will keep losing in that particular trade. With this, I end my session and we can have a QA sessions open for both series 1 and series 2. So what I mean to over here is you can ask any questions which pertains to series 1, topic discussed in series 1 or topic discussed in series 2.
Right. Well, thanks a lot, Vishal. That was very comprehensive, extremely insightful presentation that you shared with us. With that, like you said, let's move on to the Q&A session. I already have a few questions from my side, and I'm sure our pro subscribers and all the viewers watching us also are continuously sending us these questions, which I will ask them on their behalf as well. So, for the first question, let me just put out to you. I want to understand from you the market outlook from here on. What do you think? Where are the markets headed from here on? On the one hand, we have already crossed the 11,000 mark, and that's despite the COVID situation getting worse. but the rally seems to be ahead of fundamentals at this point in time. What do you suggest, and where do you see the markets going on?
Well, Sakshi, I would like to say over here, we have discussed today also at 24th that uh, you should not do any forecasting business. So I would not say, I would not, I don't have virtually any view on markets.
Okay.
If charts are saying that candles are Heikenhashi candles are bullish, I will say markets are bullish. If Heikenhashi candles are bearish, I would say markets are bearish. So virtually, we should not have any view on markets, because the moment you have a view on markets, you are actually not focusing on what currently markets are doing.
All right. So, without forecasting, just focus on the rule-based trading and what Heiken-Ashi charts are suggesting. That's the way to be. Let's ask the first question to you, Saibal Chakrabarti. Actually, she said the question to us on our emails as well. Let's just put out the question. Okay. So, the question is, when a stock is range bound, how to avoid multiple buy or sell signals without using other indicators? That's what she wants to know.
Well, I guess after today's session, where we have seen that in range bound, we can see, and we have also discussed that in a range bound markets, uh, we will see a multiple buy and sell signal happening, and some signal may yield you very less profit, some signal may yield you loss, or sometime it could be a cost to cost exit. Well, there is no way we can, try to avoid such kind of scenarios in a where we can completely can't avoid the range bound markets trading. And what we can do in a range bound market is buy on support and sell on resistance, and keep following the Heikenhashi signals. What happens in a range bound market is actually trying to find the direction, and if we try to miss any one signal in this range bound market, then what will happen is the next move, a next signal which is actually going to give you a good move, can be missed, and whatever loss you have made in this signal, there is opportunity to compensate this loss. And not only that, we can have a opportunity to make money from that. And if you tend to move these signals during the range bound markets, it's going to be tough for you. So please don't miss any range bound any signals during a range bound markets. I understand it's very painful where you buy and sell at the same price, and stocks are actually in a range bound, but there is no way we can avoid this situation. In fact, I would like to say over here, most of the strategies which are trend following strategies do take a hit and a drawdown during this range bound markets phase.
Right. Let's move on to the next question. The next question is coming from Anil Kumar, and he wants to know that in intraday Nifty future, what will be the ideal chart interval to trade and the average stop loss on the Heiken-Ashi charts to keep before the trend reverses?
Yeah, so we have already discussed that the one who wants to only do intraday, he can prefer either 5 minutes or 15 minutes. If you do 5 minutes, there is a very high probability that you can get 5 to 7 trade a day. And if you prefer only one or two trades a day, then you can prefer 15 minutes. Well, with respect to stop loss, we don't have any stop loss before a reversal signals from Heiken. So the way the because we are following a stop and reverse trading strategy, we are actually trading based on signals. So if we have a buy signal, then you have to create a buy position, and there is no stop loss in a system. What you have to put it, you have to keep tracking the markets at that point of time, and the moment we have a reversal signal, at that point of time only, you have to exit your trade and again create a new trade. I understand that it's very uncommon that we don't have a stop loss, but mind you, there will not be such kind of situation which will lead to 400 500 points fall, and in a Nifty or Bank Nifty, and you don't have a Heikenhashi signal before this fall. So yes, there is no stop loss. As far as Heikenhashi strategy, what I have discussed today, we have to just follow a buy and sell signal, and this could be a little bit tough for the people who keeps a stop loss in the system.
Absolutely, I understand that. That will be slightly tough because the whole idea that we are discussing is quite different from the traditional way of trading over here. This, as Vishal says, is a stress-free method of trading where you can just follow the buy and sell signals and just keep on following the trend as it is suggested on the Heikinashi charts. Let's move on to the next question then. Subhadra Chatterjee has sent us this question. Wants to know that if there is a buy signal on the daily chart and a sell signal on the weekly chart of the stock, what should be the ideal strategy then?
Well, we have clearly discussed that day also that weekly chart has to be seen only for a long term portfolio or investment stocks. For rest of the time, if you are a trader, short term with so by short term I can say from 1 week to 2 months to 3 months, you have to only refer a daily chart. Don't try to see a mix match the signals on weekly and a daily chart. uh, you have to, so basically the what I message I want to give over here is don't try to mix match the signals on a weekly and daily chart. If you are holding any stock which is not an investment or a portfolio stock, don't even look at the weekly chart. Just see daily charts and keep following. Don't try to confuse yourself by switching to the weekly chart. If you have a portfolio of stocks which is for a long term, then only go and see a weekly chart. Otherwise, don't even open a weekly chart. Just keep tracking daily charts. That's it.
Right. I hope that answers your question, Subhadra, that do not confuse yourself by tracking two different charts. If you're a trader, identify first of all that whether your portfolio is for the long term or you are a trader for the short term. And depending on that, just like how Vishal has suggested, you can move on to your trades as well. Now, Anant has sent us the next question. He wants to know how do we identify change in polarity with Heikinashi charts without waiting for too many doji candles?
Well, the theory of polarity says that when stock has a support, and if that support level is broken, then the stock price is actually below the support level. So the previous support will now act as a resistance. Same way, when stock is a resistance, is trading at a resistance, it break out, that resistance becomes support. So whenever this is a theory of polarity, and so whenever stock price comes near support or a resistance at that point of time. So if you want to buy near support, you have to wait for a signal or a bullish reversal, or when you want to go or book profits near resistance, you have to wait for the sell signal. So you don't have to actually predict that polarity is going to happen. Polarity by natural happens when there is a breakout or a breakdown on the stock.
Right. I hope that answers your question as well, Anand. Please do follow the advice given by Vishal and then follow as to how do you have to move on. Let's move on to the next question. Then Naveen has sent us the next question. He wants to know, can we use the Heikinashi charts with 3 minute or 15 minutes time period to understand the momentum?
Again, don't mismatch and don't keep switching between different intervals. What I would say is, if you are a scalper who wants to catch 10 to 20 points move, then you should refer 3 minutes candle. And if you are an intraday trader who wants 30 to 50 points move, then try to refer 15 minutes or 5 minutes candle.
Hmm.
Don't try to refer the signal on a 15 minutes charts and 3 minutes and then confuse yourself that on 15 minutes it is a buy, but on 3 minutes it is a sell. If you try to see two different intervals, then you're going to screw up your emotions and also your trading strategies. So never ever try to refer two different signals as a beginner. You should only stick to one interval, and if you find discomfort with that interval, then only try to switch that. So
Hmm.
please don't try to mix two different interval signals over here.
You're right. That's a great advice, Vishal. Hope that answers your question as well. And please do follow the advice given by Vishal as well so that you don't confuse yourself in your trades going forward. Tejas Nahata has sent us the next question. He wants to know, are there any scenarios or situations in which we should refrain from using the Heikinashi chart?
Yes, there are some stocks where you will see that there are no buy and sell signals, and because of the volatility and the nature of the move of the stock, those chart doesn't work on Heikin charts. But those are very few. To name them, you can refer a just dial chart. well, those that chart doesn't move as per the Heikin, but those are
Hmm.
very exceptional stocks. There are very few exceptional stocks where we have such kind of scenarios. If you see such kind, if you try to come across any such kind of stock where we see lot of dodges on a stock, you should completely ignore that particular stock with a conclusion and assumption that this doesn't work this way.
Hmm. Also, the low volume stocks that you were talking about in the previous series as
Yes.
well, right, Vishal?
Yes, so if stock also has a low volume, then definitely you should try to avoid those. And because of the low volume, there could be instances where high and low would be frequent, and this would also lead. This will also be captured on a chart where instead of a bullish and bearish candle, doji can be formed.
Absolutely. So I hope that answers your question as well. Uday Kulkarni has sent us the next question. He wants to know, are there any other technical indicators which we can combine with Heikinashi and avoid trading on false signals?
Well, there is a general perception, and even when I was also trying to, you know, try to devise a strategy for the signals and systems rule based trading. I tried my level best to try to find out, can we avoid this uh, the false signals or the range bound trading by adding some indicators. And then what I found is adding indicators is adding complexity. So I would rather say that try to not mix match this Heikin signals and strategy which I have shared today with any signal. And even if you want to do it, please try to do a back testing before start applying to the strategy which I've discussed.
Okay, I hope that answers your question as well. And that's a great advice as well. Let's move on. Akash has sent us the next question. He wants to know that if one really misses a buy point and uptrend continues, would it be advisable to buy the stock later after five or more bullish Ashi candles as well have they after they've been formed?
Well, yes, this is very interesting. Sometime because of some or other reasons, the Heikin must have given a buy signal on Nifty, say at around 11,000, and you come on your desk after half an hour or maybe a couple of hours of time,
Yes.
and you see that buy signal was generated at 11,000, but right now it is trading at 11,080. But still, the candle what has been formed is bullish. Let me enter. My advice over here is strictly no. Once,
Mm.
if you miss any signal and if you miss entering right at the signal, please don't even try to enter in between the trade. A signal missed is missed. Don't try to chase that signal, and instead try to not to miss the next signal.
Right. So a signal missed is missed. Do not try to catch up on that and wait for the next signal. We are almost out of our complete schedule, but we'll just take one last question for you, Vishal. Nishant has sent us this last question to us. Would you advise traders to trade support and resistance on any stock in the markets or only on the stocks that you've talked about in the Nifty 500 or 200 list?
Well, support and resistance is very subjective trading. You can apply this to any stock you want of your portfolio, uh, provided you follow these rules and you are able to identify the right support and right resistance. And this is one approach. If you want to follow it, the second approach is we have already identified the list of winners, and because we know these are the winners and we have discussed, we have to buy winners near support. So if winner come near support and Heikinashik is a buy signal, you can buy near support level whenever there's a signals occurring from Heikinashik chart. So yes, you can trade support and resistance either way, but when you are trading with the first way where you are applying these techniques on your own stocks, then please be very clear that you have marked support and resistance on a chart at a correct way and correct manner.
All right, then we are completely out of time. Let's wrap it up at this point. Many, many thanks, Vishal, for the two-part series on Heikinashi charts and also for addressing all the viewer questions. I also thank all the viewers for joining in too. Please do continue to share your feedback about MC Pro or Money Control Pro at nw18.com or even through our support forms. And we will keep bringing up such events for our patrons. Thanks for tuning in.